Welcome back to the channel, guys. It's Jason Pizzino with your macro cycle update. I've got some explosive signals for you today. Yesterday was the dirty little dump. Now we have some explosive signals looking at Bitcoin, the stock markets, and of course the real estate cycle. Make sure you hit the like button and subscribe if you're new here. Each of the day's analysis builds upon the previous day. So we've got some big things, as always, to look at in today's video. Let's kick it off with a few words of wisdom from the one and only Warren Buffett. Now, I bring this up at the beginning of the video because I think that we're going to start to see a lot more hysteria. I'm talking about big parabolic moves, and typically at the peaks of market, you are going to lose all your money. Well, we could all lose all of our money from the peaks because of the stuff that we hear at the tops. Now, this was just reposted yesterday. Nothing against bar chart. We have a bit of a banter on X, but I want you to keep your profits when we get to the end. All right. So long story short, Buffett in this one says the worst investment you can have is cash. You always want to have enough, etc. Okay, so he says in this one, the worst investment you can have is cash. Note that this was said in, I think, the second half of 2010. Reason being is the other thing he says in this is he's referring to the bottom of the stock market, and that being last March. The bottom of the stock market was March 2009 for the cycle, the 18-year cycle. So he's talking about this in 2010, which 100% cash is the worst investment at the bottom of the markets. 2010 was basically around the bottoms for the stock markets. Well, for the S&P 500, it was 2009. For the real estate cycle, it was around the lows. For the economy, it was around the lows. So you want to be getting your money into the markets. As I said, I bring this up because we're going into these bull market, moon boy, parabolic stages where we're getting into these peaks. What I think will happen is we'll hear more, or at least quotes from people that they said potentially years ago, cash is trash, but that's going to be at the peaks. Cash is not trash at the peaks. You want to be taking profits. So like Buffett said, you can have enough so that nobody else can determine your future. That's what he's saying in this clip. You can find it over on X if you search for it. Basically, at the top, get some cash. What we heard in 2021, if you remember at those peaks, was Ray Dalio also saying something like that. Now, was he saying it in 2021 at the peak, or was he saying it earlier and they've taken a snippet of that and then showed us at the peaks? Because people want to hear that at the peaks. They want a reason to put their money into the markets around or at the peaks. What you want to do is be taking profits. So there's my little lesson at the beginning. Hopefully you find some wisdom from it. I'll, of course, keep banging on about it because essentially it'll get thrown out when we get to the peaks. People will just ignore it and say, nah, it's always going up forever. It's always important to reference dates, especially dates when it comes to big things that big people are saying. Speaking of dates, let's take a look at the traditional market, starting with the S&P 500, what's happened over the last couple of hours or 24 hours. And then we get onto these big parabolic signals that you can see in Bitcoin, at least, beginning to take form. As it continues to break out, it'll become obvious that those signs were showing us the lows as we continue to break out. But anyway, S&P 500, it is moving very similarly to what we've been talking about here, this October seasonal pattern, looking for lows around this time in the market. There are your dates, and there are the swings into the lows, and then the market coming out of those lows probably next week. That doesn't mean that November is going to be straight up. It might just mean that we find ourselves going up to the election, some volatility in the election week or at the election date, and then we start to move higher again. November, December, seasonally speaking, pretty good. So S&P 500 still on track here. Might find a low over the coming days, or that was the low that we saw on the 23rd. It's still playing ball with the seasonal pattern here, 4 to 5 week volume fill. So I chuck the volume on here, and we're starting to see the volume pick up as we come into these lows. Maybe we see a little more, but this was the volume fill that I'm talking about. Below average volume with the market climbing here. So I think it needs to come back and fill the prices back to around 57.50 points. So just a couple of points off that now. Moving on, we have the commodities to have a look at, and then US dollar as well. So gold basically still up, bit of a pullback yesterday. I'm hearing a lot more people talk about gold and silver, especially as they push to fresh highs. Everyone gets a little more interested when the price goes up compared to when the price is down, but that's pretty typical of the market. So hopefully you're continuing to follow these patterns and trends for yourself so that you can have the patience to get in at the right times. And the US dollar is also up. Now, I did a longer snippet of this from yesterday's video, but I took it out and put it into the free Discord, which you can find a link to in the video description. Click on this here, you'll get automated email to get access to the free Discord. And I also put other analysis in there that I don't post online so that you have some time to read through it and learn for yourself. We also have the flash sale for the next 24 hours. You'll get an email about that today. So click on that link, subscribe to the email list. Now, I've also been following oil on the channel. Reason being is it can be a bit of a precursor to inflation. And then if inflation starts to get out of control, we could potentially see some corrections for the stock market and, the economy in general. For now, oil has basically been in the same trading range for the last couple of years, between 65 and 90 bucks, mostly under $80. Basically coming up to 2 years now. So ranging between 65 and 80. Now, if we start to get a breakout above $80, that could spell a little bit of pressure on asset prices. It could spell some pressure on the economy because everything is basically run on oil. Therefore, you'll start to see inflation potentially come back, which could be a problem for the US. They might have to raise interest rates again. Yes, we know that they're coming down at the moment, but that could be a problem in a couple of years' time, maybe 1, 2, 3, 4 years' time, if we start to see this climb higher and then break out of 95. So keep an eye on this. We don't need to spend a ton of time on it. It's really just looking at these price points and whether you start to see the resistance getting broken to the upside, or maybe we start to see it come down and everything is sweet and dandy, right? Next up is cryptos. Let's look at the fear and greed index. It's at 72. Greed upon greed upon greed. It's basically been hovering around at this level, going all the way back to the 15th, 16th of October. So for about the last 9 days, things have been looking pretty well greedy across the board. Now we're in this seasonal time for Bitcoin. We're now around here, and seasonally speaking, you typically see prices start to rise pretty heavily for Bitcoin. Now, the thing you need to overlay on top of this cycle that you need to overlay on top of this is where we are in the, say, the bull market or the bear market. That's going to depend on your analysis and what you believe. You probably know my view by now. I believe we're in a macro bull market and we're coming towards the later stages of that. We're around that halfway point, possibly over that in terms of just the bull move to the upside. Therefore, I think there is more chance of this happening rather than anything to the downside for October, November, December, especially after the last 7 months of possible accumulation here. So Michael's talked about this in his recent video today, never before in crypto's history. Basically, never before Bitcoin has seen a new all-time high and then consolidated for 31 weeks. So quick maths there, about 7 plus, just over 7 months. So it could be a distribution, which means this pattern results to the downside, or it could be to the upside. My view at the moment is still to the upside, and I have more data points. I have more TA to show you as to why I think this is still on the way up. And when we see signs like this, you generally get a significant move to the upside. I'm sort of hesitant saying this whole parabolic move, but that's what people search. That's what people are interested in. If you want to keep it cool, then call it a significant move to the upside. On top of that, we got price. Let's look at time. I'm saying Bitcoin bull market lows to highs in terms of weeks. Now, the first Genesis cycle that Michael calls it was around 163 weeks. The cycle after that, you've got the movement 2015 through to 2017, takes around 152 weeks. Then we had the next cycle move, which was the previous one, again, 152 weeks. We are about 100 weeks into this cycle so far. So if we only had about 50 to 56 weeks left, what do you think is going to happen from this point, especially after some of the significant signals, earlier signals, dailies and weekly breakout signals that we're seeing? Of course, I'm thinking it's to the move to the upside. But if we were to see certain levels break down, then this cycle is over. And those particular levels, at least from my analysis and using the rules that I use are this level here. So 44K. I don't think it's coming back down here, just to make that entirely clear. I don't think we're coming back to 49K on this particular move to the upside, because any breakdowns of these lows around 52 and 59 closes under those levels would basically invalidate this move to the upside, which would then put a lot of pressure on the current bull market move to the upside, and would then wind this thing down probably to come and test 52, test 49, and then eventually 44, and the game's over. So I don't believe, at least according to the analysis, if it was to come back down to 44, that would mean game over. Like, the bull market is over. It would break the bull market support level and it's over. So 44K, basically done. There could be a very minute chance that the price could test those levels and then come all the way back up. I'm not going to play my cards to hope for that. Therefore, I'm looking for these levels to hold, and that be the support for the move to the upside. Now, on top of that, Eric, good friend of the channel, has looked at a couple of these major signals that have led to very, very, very significant moves to the upside. Remove all the berries and call it a parabolic move if you wish. Essentially just using a couple of his indicators here, the BBWP and the advanced stochastic. I believe these have to come together. So not just sort of like a one-off thing here, but they've got to come together. And you can see where these levels have come through. January, October breakout, so 2023 January, which is a pretty big move out of 18K, basically broke that bear market and the accumulation at the low to then turn this thing into a bull market. If you went around in November, December 22 and January, February, March of 23, you might not know what happened then, but then you had 90% of people still believing the bear market was on. And maybe you follow me on X. I was doing a lot of posts around the Wyckoff schematic, and many did not believe that this was basically part of a reaccumulation, because we already had the accumulation back in 22, and then this was the reaccumulation, and they didn't want to believe it then. That was the sentiment back here. It seems easy now, and it seems easy in late 2023, but trying to do it in early 2023 and late 2022, almost no one believed it, and they didn't want to know. So, you know, I had a lot of terrible comments on YouTube, people saying it's impossible, right? But that's the time you want to be getting into the market. So in terms of the signal here, using the indicators that Eric's using, the breakout point, that's where it was triggered. And you can see that breakout above those swing tops. So just using some simple TA, breakout there, move to a very, very significant move. And then another one we are just on the verge of now, which could be another very significant move. Now that's not all right? I know I've put something in the title around those big parabolic moves. I want to use the TA that I like to use, and this is the swing indicator. So I'm looking at the weekly chart, and I have my swing indicator on, and I've got it on a 2-bar swing. Normally I've got it on the 1-bar swing, so you see a lot more data, but I want to break it down so that we're looking at a even longer term move, because the bigger moves that we can see when those breakouts occur, the larger that move is going to be to the upside. And I had this highlighted for the low to the top, somewhere around a 600% move. The idea here is we're just following swings, a very, very simple trend-based strategy. You have the swing tops, you have the higher lows that show up with your swing indicator, turn it off, turn it on, and then on the breakouts, it does not come back to break those swing bottoms. So it makes it a very easy tool to use to know where to put your stops, and you can continue to move those stops up with the market. And that, when the swing breaks, that's pretty much where you take your profits. It's pretty well that simple. And if you want to get even trickier, while taking your profits, you can reverse and go the other way and then do the same thing in the opposite direction. Now, I'm just looking at this in terms of big swings towards the last half of the bull market. Within the first half of the bull market, you're going to have more failed signals. So you need to get in and out more often in the beginning. The reason for that is you're not going to see clear trends at the beginning because, as I said earlier, the majority of people still believe that there is more downside to come. Now, when that market sentiment flips, that's when the trends become so much clearer and you have to hang on for the ride. It gets pretty fast, right? So if we're in that stage now, we're starting to break, as you can see here, the weekly swing top broke. Now we can put our stops beneath the swing bottoms. In theory, if this is going to be that very strong move, that parabolic move to the upside, then these swing bottoms are not going to get broken, right? That's why I'm talking about the market. If it's going to break these lows, then it's probably still needs a lot more time to consolidate. And if it is going to hold these lows, then the only natural thing to do from this point is to go pretty crazy. It doesn't have to go pretty crazy straight up. Look at 2017. You have the market just winding up to go crazy. But the beauty about it is those swing lows keep getting higher, and it gives you a very clear point to keep moving your stops. Keep moving it up. Keep moving it up. Keep moving it up. And then before you know it, you've got some time there to take some profits when the market goes absolutely bonkers at the top. Plenty of other signals we can put into it towards the peak. So make sure you are subscribed to the channel, or if you want to jump on board with TIA Premium while the flash sale is on for the next 24 hours, link in the top of the video description. On top of that, you'll get the free crypto and the economic report and access to the free Discord as well. So that's a look at major signals. This is like longer term swing indicator stuff that could potentially set us on the path for pretty big moves, right? Now, these moves have resulted in hundreds of a percent in previous cycles. Like you can see, it was about 600%. You don't even want to know this one here. It was like 9,000% from that low to that high. Do I think we're going to get that again from here? Most likely not. So what if we're going to get 100 or 200%? You guys can probably do the maths from some of these swing bottoms. 100% takes you to about 100 grand because the low was 49. 150%, just to be a little conservative here, because as we get into those peaks, or as the market moves up and breaks some of those highs, well, people don't really, they chuck conservative out the window essentially. So 150% is about 125,000. 200% is about $150,000. So I take you back to this one here. At those peaks, probably going to hear things like cash is trash. What's the point of holding it? Bitcoin is the only way to go. There's so much money printing going on. What's the point of holding cash, etc. Right? Keep a level head about yourselves, because eventually these movements always roll over. That's something that I can guarantee. There is going to be times where it's in fashion for it to go up, and there's going to be times for it to fail and start to roll over. Nothing is guaranteed for 100%. This uptrend move is not guaranteed forever. And as long as you keep focus, understand these things come at different times, I'm sure you're going to do pretty well. So moving on from that, we've also seen this pattern play out like we saw back in May, June, July, August, September, October of 2023. Basically almost to a T. The lower lows, the lows coming in, the 1, 2, 3, 4 with the higher lows as well. All that's left to do now is to break these tops at 70, 72, 74K, and that would basically confirm the weekly swing bottom pattern playing out to the upside. When you layer that on top of the 2-bar swing chart, which is a longer term view of price appreciation here, or basically the swings, that is the movement, then you're getting an even more powerful signal. So how does that look when it comes to the altcoin market? Well, again, we're starting to see higher lows form. We covered this on yesterday's video, and basically the market hasn't really gone anywhere since yesterday. So we don't need to spend a ton of time on this. $480 billion is still the level to beat. 500 billion is the next step, and then when you start to look at the next swing tops on this move down, you're looking somewhere around 550 to 580, finally reaching that tipping point of 650 billion. So it happens slowly at first, and then typically you start to see the move really take off towards the end. And that, in terms of sentiment, is what we saw in February, March, where everyone gets super excited. However, if it is the final wave up, then it could go on for a lot longer than what the first wave did. So although it might seem like, oh, everything's a bit crazy, everyone's on board, it can go on for longer than we expect. Pretty significant corrections, and then it happens again. So just got to keep on board with the trend, which is why I've brought up the swing chart towards those periods. The swing chart becomes basically your lifeline to make sure you hang on with the trend and hopefully get as many of those gains as possible leading into that final peak. So the bottom, still not in yet. ETH, pretty good proxy for the altcoin markets at this point. Again, yesterday was another day down versus BTC, so showing weakness against Bitcoin. We're about 60-ish days out from a potential low just based on previous cycles. ETH BTC is low around Q4, that December period after the election, like it did in 2020 and like it did in 2016. So we're doing a countdown here, probably about 2-ish months to go. We'll keep looking at this for after the election, late November, early December. Solana, on the other hand, major breakout at this point. Increased volume on the move out. Yesterday we looked at it, and again today it has continued this move to the upside, getting to $179 now. This was a simple 1, 2, 3, 4 breakout. So another GAN signal that we love to use. It's a pretty clear play coming through to test the price on the 4th attempt, and then the breakout. That is a much higher probability trade than any of the first 1, 2, or 3. Doesn't mean it can't happen on the 2nd or the 3rd, but if it gets to the 4th, there's a far higher probability that you're going to see price appreciation to the upside, and that it's unlikely, not impossible, but unlikely that you're going to see it come back down now. So keep that in mind if you're trying to build yourself a position of SOL. Maybe you'd get a touchdown here at the 150s, but again, don't try and play the maybes, play the probabilities. And if you do get that, hoping that it gets to the 50s, score what you can, and then hope that it comes back out to the upside. Because if it stays under those levels, then this has failed and you're going to see lower prices. Last one here is SUI. I thought I'd just write up the average drawdowns so that you've got some levels to watch if you're trying to scoop up some SUI here. The average drawdowns around 20 to 25%. So we're in that zone now. And then the next average drawdowns, which were less likely, were your 30 to 35. So 30% takes you out to $1.65, down to about $1.50, right? So plenty of moves there. The more likely move is here. The less likely move is here. Thanks again. Like, subscribe if you haven't. Have a fantastic weekend, and I'll see you guys back here on the channel real soon. Take care and peace out.